This is Business Zone on TVC News. I am Yemisi Landry Ido. A searing sell-off rocked Asian shares on emerging market currencies on Friday as investors feared higher U.S. interest rates under incoming President Donald Trump will spark capital outflows from the region. European shares are expected to open slightly higher after moderate losses in the previous session, with the spread bettors seeing major European indexes such as Britain's FTSE and Germany's DAX rising 0.1% to 0.4%. MSCI's broadest index of Asia-Pacific shares outside Japan fell 1.4% as U.S. bond yields continue to soar on views that Trump's spending plans will push up inflation, possibly triggering more aggressive rate hikes by the Federal Reserve. Emerging markets bore the brunt of selling, with MSCI Emerging Market Index falling 1.5% to its lowest level since July, with Indonesia and Malaysia hitting the hardest in Asia. Japan's Nikkei bucked the trend, rising more than 1% to 6.5-month highs. The yen weakened against the firming dollar. On Wall Street, the U.S. S&P 500 index rose 0.2%, while the Dow Jones Industrial Average jumped 1.2%, smashing through its previous record high set in August by almost 1%. And in contrast, the technology-heavy Nasdaq fell 0.5%, with Apple dropping 2.8%, hit by fears that Trump's immigration policy could prevent Silicon Valley from attracting talent from around the world as it does now. U.S. bond markets have also seen dramatic moves with Trump's victory, with 10-year U.S. Treasury yield hitting their highest level in 10 months. Emerging market currencies were hammered by concerns investors could pull back their funds out of higher-yielding emerging assets and move them back to the U.S. Debt yields are rising in Europe as well, with 10-year German bonds yield hitting an 8-month high of 0.2%. All right, the cocoa is the mainstay of Ivory Coast economy, but this is at a cost of ethnic bloodshed and bitter disputes, since just 4% of the land is state registered with property titles. Well, this has left farmers in the West African country at the verge of displacement. We have details in this report.
Farmers who come from the Baule ethnic group based in the city claimed that landowners reclaimed hectares of lands from them simply because they are not locals.
I
bought the plot with Timothy and I worked with him. But when the land started to produce, someone else came and said this land was his, and then took it from me. He stole 2 hectares from me.
It is important to know who owns the land, because land in Ivory Coast has become a source of conflict, especially in the western part of the country, in forest areas where natural resources are under pressure. So we need to clarify this to avoid conflicts.
Thousands of people from different parts of Ivory Coast and neighboring Burkina Faso, who have for years been encouraged by the authorities to settle and farm, usually buy and rent lands to boost production. But in the eyes of local folks, they remain unwelcomed foreigners. A shortage of land and unpopular sales have today grown into a problem, frequently degenerating into sometimes deadly conflicts in the world's top cocoa-producing nation.
So
the goal is to have a tool, a land register, to have clarity on what people's rights are.
When there are disagreements between us and the people living there, we go to the land to investigate. If there are documents, even documents between 2 people, we take these documents into account because it's at least a written document of a sale. And even if it's on a fixed price, we take that into account and we deal with this peacefully.
The country's newly passed constitution favors locally born people and specifies that only the state, public authorities, and Ivorian individuals can access rural property. Analysts say the millions of Burkinabe immigrants to Ivory Coast have thus been cut off from the land which they term as political patronage. And as this rural land issue remains a time-bound and a very sensitive subject, the 2013 Ivorian government's project to provide 23 million hectares of land to be registered over a period of 10 years has failed to get off the ground. Vivian Adepamowo, TVC News.
Well, Zimbabwe has earned $670 million from tobacco exports as China continues to be the major market destination. Statistics from the Tobacco Industry and Marketing Board revealed that the country exported 45.2 million kilograms of the golden leaf worth $373 million to China this year. Well, this is an increase from the 32.7 million kilogram of tobacco worth $270 million exported to China during the same period last year. South Africa has also maintained its position as the major African market destination for Zimbabwean tobacco. Donald Trump's surprise victory in the U.S. presidential election Wednesday has continued to cause exchange rate volatility in key markets. The Central Bank of Kenya now has promised currency traders support in the event of a speculative attack on the shilling. The CBK's show of readiness to deploy its substantial foreign exchange reserves in the market was meant to forestall speculative trading on the shilling in reaction to news that other world currencies were experiencing volatility against the dollar. The Kenyan shilling have remained relatively stable, standing at an average of 101 shilling to the dollar. And Kenya is relaxing some of its tea industry rules to encourage production of a new variety in an effort to boost earnings for farmers of the crop. The East African nation is the world's leading exporter of black tea, but oversupply and variable weather conditions often lead to global price fluctuations. Kenyan tea production is expected to be 430 million kilograms this year, while 50,000 kilograms will be specialty teas. China still dominates white tea production, but Kenya and other growers have started cultivation. And Nigerian regulators and operators in the financial sector are looking for ways to strengthen ties and understand issues relating to non-compliance of financial standards. And they are worried that if this is not checked, it could affect confidence and stability of the financial services sector.
Companies across the financial services sector are facing increased risks and challenges as a result of the constantly evolving complexities presented by the financial accounting reporting and regulatory requirement. This gathering of professional accountants, auditors and tax administrators is the first of its kind, creating a platform for regulators and operators to identify challenges and proffer solutions.
As the world is evolving, so many things are changing. Technology is changing things very quickly. The mode of transactions are changing. So also the scope or the spectrum of ethics is also changing. So from time to time we have to adjust and readjust and refocus to ensure that new areas that may erode our ethical practices are adhered to.
The regulators always talk about compliance. They're always talking about sanctions. They're always talking about consequences for non-compliance. So all this, the operators will have the opportunity of liaising with them, discussing with them, creating a relationship with them. So it won't just be all about sanction. Tell us what you want. So long as we know what you're asking for, then we are ready to also comply. But in the instance where we don't know the expectation of the regulators, then certainly the issue of sanctions will come in.
The chairman of the National Tax Policy Document Review, Professor Abiola Sani, explains the role his committee is playing in improving and sustaining tax culture, as well as diversifying the national revenue portrait.
It is pretty clear now that we are not an oil-rich nation, and we are at the bottom in terms of financials. So we are in need of new cash. And the most sustainable way to generate revenue for public finance is through taxation. We are trying to re-engineer the tax system and deal with all the teething problems, all the challenges that we all know and that we have all been talking about, but we have not been able to come up with creative solutions to them.
The take-home here is that maintaining regulatory compliance is clearly a top and ongoing concern for all financial organizations.
When we return from this break on Business Zone, we'll be looking at the overall impact of this week's event, especially with the wins from Donald Trump in the U.S. Over the economic activities in Africa, the emerging markets, and of course the world over. Do stay with us. It's Business Zone on TVC News. The African continent has been struggling economically in the past years, with growth having come tumbling down from 6% forecast in 2014 to the current forecast of 1.5%. It would not be surprising given the other pressing, mainly domestic issues which Donald Trump will have to address in his first couple of years if Africa slides to the very back burner. Financial markets and emerging market currencies plummeted on the realization of a Trump victory, but have rebounded quickly, and these are some of the best barometers of what may or may not happen as a direct result of political events. All right, let's look at the overall impact of Trump's win on Africa, especially looking at Africans in diaspora in the UK and all that. And I have joining me now in the studio, media marketing consultant, Abbas Tijani. Many thanks for your time. Abbas, I know you're based in the UK,
yes,
and I'm sure you must have been overcome by the shock of how Trump won, and that must have gone really. But looking at reality now, how much do you think his win would affect the economies there and, of course, the works of Nigerians in diaspora?
Well, first of all, what you don't know is who I supported. But
okay. Yeah. So you do support Trump?
I kind of took a middle ground, because if I was to assess them politically, Trump, obviously, going by his rhetoric before the election, stood for something I'm not in favor of. However, Hillary has a bit of baggage as well from her past, especially regarding black people in the United States. As someone resident in the UK, we've just recently gone through a referendum where the UK decided to leave, with Brexit, to leave the European Union. And there are certain parallels I can draw between the American election and Brexit. You know, that was an election that the majority expected that Britain would remain in Europe, but then they had a certain critical majority of disgruntled Britons who felt, you know, we need to leave. And one of the indices was the role of immigrants. And similar thing for Trump. So if we're just to look at Brexit on its own and how we think it would affect Africans and relate it to
the
United States win for Trump, you know, the concern initially would be for the likely entrance from Africa into the UK or into Europe, and for those who are currently resident there. Now you have those who are resident and are probably you know, ingrained in the system. You have those who are still working on getting their papers. These are natural fears you have, because once the laws are passed, or there's a possibility the laws are passed, the tendency this now becomes a mindset with which the generality react. So in terms of Brexit, we're not certain yet, because Article 50 needs to be passed before it goes into law. With Trump, one thing we've noticed, he had a certain rhetoric, which I personally believe he had to toe that line to switch the disgruntled. Already, within just days of his win, we can see he's already backtracking. You know, certain elements have been removed from his website. So I don't really think his campaign rhetoric will form the basis for domestic and international policy.
And
however,
also his economic policies,
yeah, however, though, it's something for people to worry about, especially immigrants, because a lot of this campaign was based on him keeping out immigrants, particularly Mexicans, you know, the Hispanics. He didn't really drum much on Africans, but then, once you're a foreigner, if history is anything to go by.
Exactly. All right, looking at the number of undocumented immigrants in the U.S., we have over 11 million of them down there. What economic implications do you think is deporting these people would actually have on the economy of the U.S. and, of course, talking about the people down there already working there?
Yeah, a nation like the United States or Britain are nations that pretty much have thrived on the input of immigrants. The danger is most of this is not measured properly, because at times it's hard to really work out how this works. But immigrants come with something unique. They come in to work hard, and look at the success stories. You know, if my statistics is right, Nigerian families on average are perhaps the most educated and the highest earning in the United States. Nigerian families. And if you come to the UK, you look at Nigerian students in education, second, third generation Nigerians, they stand out in everything. Immigrants come in to build. So if going on that, you know, on the statistics alone, I refuse to believe that his pre-election rhetoric would be what it would take to move America forward. Because remember, China is on the wings watching. You know, anything America loses out on, China gains. Exactly. And we can see how far they've gone in Africa. So a Trump, a racist, non-Muslim supporting anti-immigrant Trump will be very, very dangerous for America. And we might, have a little shudder in Africa or with Africans a lot, but with time, as you probably see, the markets kind of like trembled a bit, but then they find their levels, and obviously all those gaps will be filled by other nations. China's in the wings, so America, watch out.
Exactly. So from the global stocks reports that we are reporting today, we already see that the searing sell-off rocked Asian shares and, of course, emerging market currencies there. But what impact would you think, or do you think, when eventually gives us his economic policies, what impact do you think it would have on Africa?
Nothing is clear as it is right now. As it is, Africa, in the last 2-3 years, has been leaning more towards China in terms of policies aimed at developing Africa directly. And what has Nigeria benefited from America in the recent past? Over the last 4 or 5 years, the sale of Nigerian oil to America has reduced because of the activities of fracking. It has improved. Yeah. So a Trump government that refuses to, a Trump government doesn't show any indication of that improving. And already we are going through our own recession as it is. So hopefully I'm expecting this current administration to have had things in plan. Because even if it had been a Hillary Clinton win, I still don't see what major impact the United States would have made for Nigeria in this present point in time. And if we use Nigeria as a basis for the rest of Africa, we're the largest, second largest economy as it is. I don't see any major impact. Perhaps with the currency, in terms of currency play, which is not working for us right now as we speak, as it is. Yeah.
All right, I won't let you go without talking about Brexit, really. You are in the UK. So far, give us paint a picture of what it is like for businesses down there, especially with the exit of the UK from the European Union.
The biggest problem of Brexit for a lot of businesses, obviously, is access to cheap labor. We had the inflow of the Polish, the Romanians, when they joined the EU, and a lot of part of the anti-immigrant sentiments were kicking in because most of them came in, skilled labor at very, very cheap rates. Prior to them coming, was Africans occupying a lot of those spots. So with the Polish coming in, a lot of Africans, primarily Nigerians, had issues, because breaking it down, it was £7.90 for the minimum wage, that's standard. A lot of these people were working way below the minimum wage. Second, third, fourth generation Nigerians have kind of built their communities to a point where they wouldn't do that. So we felt an immediate impact of that, even without Brexit. So Brexit could actually work in our favor.
Oh, good.
Really, that's another way to look at it, because if Britain out of that mix, then you don't have easy access for all the other Europeans, the Romanians, the Polish, that some of the British think really are not here to help us. But then you have the Africans, we have a history going back at least up till independence, 1960. So that could actually work in our favor. The challenge could be in the next generation coming into the UK.
Okay.
That's where the real challenge could be.
All right, Amos, thank you so much for your time on Business Zone Media Marketing. Marketing consultant Abbas Tijani.
Thank you so much.
Thank you.
Pleasure.
Credit ratings agencies are due to visit South Africa next week ahead of reviews of its credit ratings. And ahead of the visit, the country's finance minister, Pravin Gordhan, says the country needs to tackle corruption and weak economic growth or face the risk of a credit rating downgrade to junk status. All three major rating agencies have warned that slowing growth and political infighting could trigger downgrades. Ratings agency Moody's has South Africa on a rating 2 notches above junk grade with a negative outlook, and it is due to publish its next review later this month. Fellow ratings firms S&P and Fitch, whose reviews are also due before year-end, have the country just a step above junk. Gordhan last month slashed a 2016 growth forecast for Africa's most industrialized economy to 0.5% from 0.9%, raising fears of a credit rating downgrade from Moody's, Fitch, and S&P Global Ratings by year-end. Investors and the ratings agencies alike are worried that the police probe into Gordhan's role in the surveillance unit could be part of a political ploy to pressure the Treasury into abandoning its prudent fiscal stance. All right, Botswana's diamond industry hopes to sparkle once more, and the sector constitutes about 20% of the GDP and over 70% of export revenues, and it is Africa's largest diamond producer. Well, this makes the diamond industry, mining, cutting and polishing, and sales the most important economic activity for the current country. But the sector is faced with various challenges making key stakeholders to meet in the country's capital to discuss the future of the industry that currently faces an uncertainty due to a slump in commodity prices. Well, it has been a tough time to be in the diamond business in Botswana. Like all other precious commodities, global demand for diamonds has been greatly subdued, some suggest to near 2008 recession levels. Well, crude oil prices are down again at the world market due to oversupply by major producers. At the London market, the Brent trades for $45 per barrel in early trade. And for the OPEC basket crude, its price steadies at $42 a barrel. Well, that's it for the week on Business Zone. Many thanks for watching. We'll bring you more insightful analysis when we return again. I leave you with the figures of the exchange rate as it stands at the moment.